Hey everybody, Josh Sigurdson, a World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen, and as this article from Zero Hedge says, Bank of America, we've seen this movie before, it ends with a recession. And as the article goes on to say, in a merciful transition from Wall Street's endless daily discussions and more often than not, monologues of why volume is record low and why a financial cataclysm will ensue once volume finally surges, lately the main topic preoccupying financial strategists has been the yield curve's ongoing collapse, with the 2 years and 10 years sliding and trading at levels last seen in April 2015, and the curve inversion predicted by BMO to take place as soon as March 2018. And according to at least one other metric, the yield curve should already be some 25 basis points inverted. This is shown in the following chart from Bank of America, which lays out the correlation between the U.S. unemployment rate and the 2-year, 10-year curve, and which suggests that the latter should be 80 basis points lower and some 25 basis points in negative territory. And the article quickly just goes on to say, some additional context from Bank of America's head of securitization, Chris Flanagan, he goes into how unemployment is low and probably headed lower, and the Fed is intent on raising rates to stave off future inflation. We've seen this movie before, and it typically ends with a flat or inverted yield curve. Based on history and gravity, we think the most likely path forward is a 2-year, 10-year spread reaches zero or inverts sometime over the next year or so, and that recession of some kind follows in 2020 or 2021. Now, this is big news. It's very complicated news. John, can you go into what on earth this means?
Well, it's complicated and it's not. Talking about the yield curve that they're talking about, it's the 2-year bond, which the U.S. Treasury issues every time they get into debt, and the 10-year bond, which is longer-term debt that you hold for a longer period of time. It's like a 25-year mortgage versus a 30-year mortgage.
Yeah.
You kind of get the scope of what we're talking about. Now, this yield curve that they're talking about is when the 2-year rate is at a higher rate than the 10-year rate, which in finance itself, the longer you borrow money for, the higher interest rate you have to pay because it's more risk on whoever is borrowing to you. And when we go and look at the Fed chart here from the Federal Reserve, the St. Louis Fed that does their data, you can take a look here and see all the different recessions around the world, the late 80s. You could see the yield curve inverted. You could also see the yield curve inverted in 2000 during the dotcom bubble. You could see it inverted in 2008, and it's going down again. It's prepping us and telling us we're heading for another recession. Which is, it's not really recession. What we've been...
it's a mountain I don't want to walk down without falling straight to my death, because it's getting more and more and more steep as it goes.
Yeah, and it's just, when this is inverted, it doesn't make sense in any type of economics. When you look at it, if you want to borrow money, you don't borrow money for a longer term, for lower than a short-term loan. It just doesn't really make sense. And also when you look at bonds, for example, you look at garbage bonds, I call them, or junk bonds, as the banks call them, versus, for example, a massive, safe government as the United States, where the junk bonds are yielding less than the actual bonds from the United States, which is supposed to be the strongest economy in the world. You have, like the Greek and other economies, yielding less and actually are lower than the United States. So there's a lot of things that doesn't make sense whatsoever, but you need to take a look at the yield curve, because that yield curve predicts always what happens, and it's just traders trading and just seeing regular outcomes of the economy, what's about to happen, and they're kind of predicting what's happening about this flattening yield curve, and you're seeing it's starting to come down. They're really struggling to try to prop it up by quantitative easing and other programs, but it's coming down and they can't stop it.
Well, John, what does this mean to the average Joe that's, just working a 9-to-5 job and, he's looking at this and it's like, well, what does this mean to me?
Well, he wouldn't care about the yield curve itself. It doesn't really matter. But what it predicts, And if you take a look and really go and look at financial crashes and take a look at the exact years where the yield curve is in the negative, you can see it actually grade for recessions here. By the Federal Reserve, they actually grade out the recessions, and you can actually see exactly right before the crashes, it went into negative territory, and it's heading there again. It's predicting another massive financial crash, which is now on just an epic scale of what it had been before, because it's just so vastly manipulated. And it's just showing that the stock markets, first of all, that's what it shows, that it's going to crash big time. Yeah. But this time it's not just stocks, it's real estate, it's debt in all kinds of aspects around the world that are in massive amounts, inflated territory.
Well, I mean, there's manipulation from all ends, and it's kind of cute that the Federal Reserve kind of flaunts out all these recessions that they caused throughout history.
That's exactly.
They're like, hey, look, this is us. And, it's kind of... It's imperative that people understand this, mostly because of the sign of the times to come, what it means for the future. And when you look at how it affects, or what we've seen the effects of within the bond markets, these bubbles, the derivatives bubbles, then at the same time the manipulation in the monetary system as fiat currency is printed out of thin air. All fiat currencies eventually revert to their intrinsic value of zero. They always have, they always will. And we can't put a finger on the date that it's actually going to happen because the fundamentals are off the table due to the level of manipulation. But we know it's going to happen, and it's good that we understand ahead of time so we prepare. And this is just another example of all these things coming to its inevitable end. Going back to 1024 AD for fiat currency, all of them have failed. And then going into just over and over again, this problem, reaction, solution, repeat, Hegelian dialectic of the markets just constantly being manipulated, bubbled, pops, manipulated, bubble, pop, getting worse each time.
Yeah, and it's funny how the Federal Reserve has all these numbers showing exactly what they've been doing. They've been manipulating the markets. And every time they tried to do something, they create another bubble. Yeah. It's just insane that they even want to keep this information out for people.
Yeah, but it always ends in the same way. And for the average Joe, I mean, when it all comes crashing down, if they're not prepared, then
most people
are in servitude.
Yeah, what this is predicting is the stock market crashes. That's what you could see the recessions, right? Yeah. And where does most people have their money today? And the baby boomers have gone into equities, because I was watching a documentary from England that were talking about money and blah, blah, what's currently going on. Yep. And you saw baby boomers, they're desperately starving for yield because the yield curve is inverting. As you're talking about, the longer term debt that they thought was safe is not, giving them enough for them to retire versus the inflation rate. So they have to go into equities, which is now, of course, the yield curve is predicting that we're going to have a massive bust in equities. So they're just going to get eviscerated again.
This affects us from all angles. It affects the pension system. It affects students. It affects the stock markets, jobs. It affects basically everything. And the value of the currency in your wallet, everything is going to be affected. And the only way to get around it is to stay out of debt servitude, because the government and the banking system thrives off of debt. And if you're shoved down the bottomless pit of debt, you are forced to ask for a ladder up from the government and the banking system, which puts you in perfect servitude right where they want you. So looking at solutions, food, water, shelter, self-defense, you're not gathering things for the toughest guy on the block. Of course, gold, silver, tangible assets, decentralized things like Bitcoin, cryptocurrencies, the ones that you've done your own due diligence on. And of course, just financial responsibility, self-sustainability, because you cannot have true freedom without responsibility. And that's why people have become so dependent over the years, because the government and banking system want them dependent and want them in debt. So with that said, thanks for going into this with us, John, and we will be back with you with much more. This is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth, be the change. Like what you see here at WAM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so overwhelmingly demonetized and censored by YouTube as the Anti-Defamation League comes in and flags all of our content as hate speech. You can also find me at Josh Sigurdson at steemit.com. That's steemit.com, the future of social media, where you get paid in the upvote of your post via Steem, the cryptocurrency. You can also find our Bitcoin address in the description and the comments below, as well as on the screen for you to scan if you please. And don't forget to come on down to Anarchapulco in Acapulco, Mexico in February, one of the best events of the year, and you can save money on your tickets by typing in promo code WAM. That's WAM. We'll leave the link below for you, and until next time, don't forget to subscribe. This is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.